In here and talk about what he wants to talk about on the grain market. Oliver, appreciate you stopping in this morning. Tell us what you got, buddy.
Well, yeah, thanks for having me. A lot of green on the screen to start the week, which is certainly nice to see, especially, coming back from the weekend, the Sunday night open, a little bit softer, really across the board in the grain markets, but finding our footing here where it really matters. The 8:30 open, when you get more participation in the volume, the trade volume starts to pick up. So it's nice to see buyers stepping in and kind of feeding on the end of last week's strength. And now we've got some of these markets testing some really big levels for that July corn contract, the upper 470s. That's really a retracement of the breakdown point from the January 12th WASDE report, and I think is going to be really important to keep a close eye on in the first half of this week's trade. If we fail to get out above there, potentially you see a little bit of profit taking from recent buyers and we consolidate a little bit lower. But ultimately, I wouldn't be surprised to see that give way and lead to additional short covering. The next line in the sand of the upside would be the 491 to 495 area as the next stop. So I've been telling guys, we work with a lot of different clients. There's a big difference between, being a producer and needing to hedge the market and trading the market, right? If you're a producer, you probably want to be a little bit more proactive at these levels, especially, if a few months ago you were wishing, man, if I could just get decent corn back near $5, I would love that. Well, here's your opportunity to take action. But from a trader's perspective, I still think there's probably a little bit of meat left on the bone as we're seeing commodities as a whole continue to grind higher.
Well, and we're seeing a lot of differentials, too. We got weather issues down in South America. We've had some weather issues here in the United States and potentially even looking for some replant for some corn maybe that was planted down in those river bottom levels. Anything else that you got off that WASDE report that really interested you?
Well, I think what you just touched on is largely what's been driving the market here as of late, these weather concerns in South America, and you're looking at other nations as well with the issues with their wheat production. So you're kind of seeing all the ships rise with this tide that we're seeing, and I think that's kind of feeding on itself. And the short covering has been real as of late. We saw funds cover, about 115,000 corn contracts last week through May 7th. I imagine they covered a lot more on Tuesday and probably more this morning. So the short covering is real, and I think that's kind of what's fueling this seasonal rally, which I don't really want to step in front of just yet.
Sure. And our livestock producers, are they prepared for this rally here? Are they taking any kind of price action because of this?
Well, we've been working with a lot of clients over the last couple months when, looking at the corn volatility being extremely low. When volatility is low, that's a great time to use options as a tool to manage risk. And for producers, livestock producers who are looking to hedge feed costs, buying some out of the money calls is a great way to do that. I don't know that I would go chasing it here as we're up against some psychologically significant levels. But if we see that volatility come back down, I think it's probably prudent to manage some upside in the corn market.
Well, we do have some differentials that we didn't have, less than 3 or 4 months ago, where we were looking at just literally everything being close to perfect, and now we do have some disruptions. Oliver, stick around. We're going to talk more about those cattle when we come back with Oliver Slope. Stay with us. 101.55. I want to invite my guest Oliver Slope back in again. Oliver, anything in the livestock market that really catches your attention this morning?
Well, we've just seen kind of a choppy consolidation trade here over the last week or so. And I know you and I have talked about this on air before, where you got a lot of this headline risk with regards to the avian flu, and you've got some concerns in the economic data that I think is probably going to keep a lot of the large players on the sidelines from a speculative position. I don't think anybody wants to really get married to either side of the market in this scenario. So consolidation is kind of what we're looking for, which ultimately I think would be really healthy for the market. You and I both know we've seen a wild roller coaster in the cattle complex over the last 6 months. So it's nice to see things kind of settle down. The cash market for cattle still hanging in there pretty well. So I'm still a little bit optimistic on June's. Hopefully we can get out above that 100-day moving average at 177.75. Get us working a little bit closer towards that 180 level. We do have some economic data out this week, though. Retail sales, PPI, and CPI, and that's going to be big for the outside markets, which could land hand into the cattle trade as well.
Well, you made a good point where we're seeing some consolidation in price. We're also seeing some consolidation in the amount of traders participating. I looked on Friday, and we're down to 266,000 contracts in the live cattle. We were close to 274, 275 less than probably 3 months ago. So it's really come down quite a bit on that. Anything you see in the hog market just right offhand?
Well, we've seen a trend of long liquidation in the hog complex from those recent highs, which I think is healthy to see. I think we could probably see a little bit of relief here, get that June contract maybe back towards 102. If the market cannot get out above 102 in that June contract, I wouldn't be surprised to see additional long liquidation. Funds right now still long about 66,000 futures and options contracts, which is still a pretty hefty position, but not as large as it was just a couple of weeks ago.
Well, and we're really working hard on converging basis that, and I haven't really seen a cutout going to boost that index up too awful much here recently. Oliver, appreciate you taking the time to be with us this morning. As Oliver Slope, he is with Blue Line Futures, and